This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. And on behalf of everyone here at SNN, I'd like to wish you all a very happy holidays and New Year. As always, you can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you're listening to episode 79. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rcraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. For this episode of the Planet MicroCap Podcast, I spoke with Thomas Bachrach, founder and principal at PFH Capital. I met Thomas at the MicroCap Leadership Summit back in September. And when we were at the bar debating whether investing in an airport in a third world country was one, an investable idea, and then two, trying to figure out who would then go and fly over to do the due diligence. And but all joking aside, I actually really enjoyed chatting with him and learning his ideas on investing and microcaps. Thomas recently launched PFH Capital, a globally focused investment advisor focused on, and I quote, micro and small cap businesses with significant insider ownership, ample growth runway, and healthy finances, as it states on the PFH Capital website. So I thought that the goal for this interview was to learn more about his investment philosophy and strategy. Thank you again for tuning in to episode 79, and please enjoy my interview with Thomas Bachrach, founder and principal at PFH Capital. But first, a word from our sponsor. To my loyal listeners, subscribers, and fans, Robert Kraft here, your host on the Planet MicroCap Podcast. The 2019 Investor Conference season is upon us. Where are you going this year? I'd like to take a second to invite you to join me and maybe a few of the guests you've heard on this podcast to our annual MicroCap Investor Conference, the Planet MicroCap Showcase, April 30th to May 2nd, 2019 at Bally's Hotel and Casino in Las Vegas. The Planet MicroCap Showcase will be 2.5 days of company presentations, networking opportunities, an educational workshop, and you will get to meet privately in one-on-one meetings with management of well-known emerging growth private and publicly traded microcap companies. We are back with new surprises and programming that you will not want to miss. So join us for the Planet MicroCap Showcase, April 30 to May 2nd, 2019 at Bally's Hotel and Casino in Las Vegas. For more information and register to attend, please visit www.planetmicrocapshowcase.com. See you in Vegas. For this episode of the Planet MicroCap Podcast, I would like to welcome Thomas Bachrach, founder and principal at PFH Capital. Thomas, welcome to the Planet MicroCap Podcast.
Thanks, Bobby. Thanks for having me.
It's great to have you on. So as we always do here when we get started on the podcast, let's get your background. I mean, how did you get into the wide world of investing, microcaps, and finance?
Yeah, so I'm the principal of PFH Capital. We're just quick background on us. It's an investment advisor based in the northern Philly suburbs. We're long biased, globally focused, predominantly micro and small cap equities, as your listeners would probably guess. On a personal basis, I took a somewhat, I'd say, unorthodox route to investing. When I graduated college back in 2005, my goal was to move overseas, have some adventures. I hadn't really been in investing before, and it hadn't become a passion yet. In the process of doing that, I ended up hired by a large Egyptian construction firm and moving over to Egypt. I ended up spending half a decade there. We had projects throughout North Africa and the Middle East. When I originally got the job, I had majored in economics, and I told them that in the interview, and they must have heard accounting, and they kind of just, slapped me under the CFO of a $2 billion construction segment. So, I figured that'd be a disaster given I didn't have, accounting knowledge per se. So, but, and this is probably career advice to your listeners out there, your young ones at least. If you're looking for a job, being an American in the third world, at least in Egypt back then, it was not a bad move because I kind of walked in with a certain amount of faux credibility. People kind of assumed I knew what I was doing and just kind of threw me in the deep end. And by the time I came back to the U.S., I actually was a half decent accountant. So it was the experience was awesome over there. My wife and I ended up back in Philly, which is our hometown, when we were getting ready to have our first kid. We'd had a couple good investments over in Egypt, and we're lucky enough to kind of get out of them before things blew up in 2011 over there. So we got back, and I wanted to put my assets and finance and accounting knowledge to work. So I kind of figured I'd teach myself public markets investing. At that point, my path, I can't say it was really all that abnormal. I was kind of hooked the first second I discovered Buffett and Munger. I know that's cliche, but they were kind of putting all the thoughts I already had in my head into coherent letters and interviews. And I was fortunate to kind of, that I've kind of grown in the internet age here. Back in the day, I would have needed to kind of luck upon the right job and mentor. But, with the internet, I was able to kind of hand select my own mentors. So, one end of the spectrum, that's other small investors, blogs, comment sections, things like that you're collaborating with on ideas. And at the other end, it's guys like Buffett and Munger who you're never going to meet, but end up having a huge impact on you. I completed a CFA program in 2014, which, that was fine, but, nothing kind of replaces, actually doing it, and practicing and kind of getting your 10,000 hours. PFH Capital, the entity, I set it up in 2014 to manage some family funds alongside my own. And I didn't really go full time now as an investor until a couple months ago when I kind of dropped the consulting gig I had, which was with the same Egyptian company I referenced earlier. And it's been awesome so far. I can't tell you how nice it is. Just being able to focus full time on the investing, not having one arm tied behind your back with the, consulting business, having your phone ringing all day. So that's kind of the background that brings us to this call.
For sure. So I have to ask firstly, like how cool of a job is that right out of college? You go to Egypt. That's so random.
It was ridiculous. In college, like I had, so I started college and I went to Cornell University. I started in 2001. Mm-hmm. And my first week there was 9/11, and it was mm-hmm. like, we were right there in New York. And so, it was like, it created some demand for I'd say Arabic language. And at the time I was thinking, I'm in this liberal arts, program, and the only tangible, useful skill I could probably pick up is language. So, and I went and looked at the time. I remember Mandarin met 8 times a week, and Arabic was 5. So I ended up doing Arabic, and so it was. I had already been out there, kind of on an abroad, and I think I was able to talk my way in on a job because of my experience there. But it was awesome. It was. I have 2 kids now and a wife. I'm in my 30s. It's much harder to do that, these days. It's to be out there. And like I said, from like obviously we had just like a lot of fun out there. But it's from a work standpoint, you're over here out of college. I was just a 22-year-old idiot, and which would have been factually correct. But it's over there. It's like, it's this American. He must know what he's doing.
This Ivy League.
I know. So just way too much credibility. Yeah.
So you mentioned that you did your first investing when you were in Egypt. Were you investing in American listed companies, or were you looking at actually some listed on the Cairo exchange or over there?
It wasn't public markets over there, so it was actually. the biggest thing we did was my wife and I, we were living out there for like half a decade. So we ended up buying a property at one point, which was, it was practically like this like bombed out like shack when we bought it, but it had 2,000 square feet inside as an apartment and 3,000 square feet of rooftop outdoor space. And it was right in this area called Zamalek, which is an island right dead center of the city. Is kind of where a lot of like the rich, local Egyptians live. It's not like an expat area per se, but it's, and so we bought it, put a bunch of work into it and kind of turned it into this really, really awesome place. We had like an outdoor projector screen and bar and like all these things. I mean, it was just like a real fun kind of, to be honest,
project,
party pad if you hang out there. And it was funny, I had no idea what I was doing. I mean, from the start, we were like, we'll just sell it to like some Saudi or something when we leave. And lo and behold, that's what happened. So, we sold it for a heck of a lot more than we rented for. And we had a great time living there. The other thing is my wife actually opened up some Curves gyms out there, which was the all women's concept was kind of worked in the Middle East in a way. It was a slightly different model than what it was here, but so she sold those. So, we had no idea what we were doing, but we just kind of got lucky. And if we'd hung around post the 2011 revolution, I would have had a lot less to work with in public markets when I got back.
Literally, I was just going to ask about that because, we met, for those who were listening, for my audience, we met at the MicroCap Leadership Summit. And I think it was at the bar when you were talking about how, you were living in Egypt and you were there when you saw the Arab Spring. Like, I think you said you're sitting on your words blanking me, but you tell the story better than me.
Yeah, no, well, actually, I have a theory about how it all, kind of unfolded. I'll go off topic here for a bit.
By the way, I apologize. We will get to investing questions very shortly.
No, yeah, this is good. This will be the first. I think this will be the first honest public accounting of what happened in Egypt in 2011. Now, I was living like right by the Algerian embassy, and in the 2010 World Cup qualifiers, Egypt and Algeria went to like a. They split the first two matches and they basically had a third match they were playing it down in Sudan and it was like a play-in match to go to the World Cup. And Egypt lost and, the Algerian embassy kind of paid the price for that. And we were all kind of hanging out on my balcony, just watching it kind of unfold. And, it was, but at the time I remember, I had a lot of, young Egyptian friends and, you just got the sensation at the time. It's like people are like, oh, why would someone riot over soccer? This is stupid. And, there was kind of the sensation at the time among young people. It's like, nah, like it looks like they're practicing, and I remember because back in the day in a place like Egypt, they were, they would spend 3-4, months planning a strike and would give the government plenty of time to kind of crack down on them. And by 2010, everyone's on Facebook. They could organize in a couple hours. So you felt something coming for sure around then, I thought, but it kind of came quicker and unexpected. Than I thought it would. But but I loved it over there. I mean, anyone who's considering visiting Egypt, I mean, awesome people, beautiful country. You kind of got to know how to do it, but it's it's a great place.
So what would you say, I mean, kind of getting back to our topic at hand, but related to that experience, what would you say you drew from that experience that maybe helped you in your investing career?
So, I would basically say it's that, I think I take a pretty independent approach to things. I didn't, I didn't study finance and accounting kind of through the normal kind of Western eye for it. I didn't kind of go into an iBanking career where it was everything was kind of there was a kind of hazing structure you went through. I kind of kind of had to come at it from things that from kind of like a different angle. One of the things I really kind of picked up from the experience, I'd say, which, you don't have to be in Egypt to pick us up. You can be almost anywhere. But, we were a publicly traded company over there. And, I was doing all the financial reporting. I was helping with guidance. I was doing all the stuff on the inside that as an investor, I now look at from the outside. And in retrospect, it was dumb luck, but in retrospect, I think it serves me well as an investor because I just have a completely different opinion of how the insides of these big corporate bureaucracies that are publicly traded work than a lot of the guys I know who have only been on the outside investor side. And the way that manifests itself is I spend a lot more time thinking about management qualities and incentives because there's nothing that beats owning a bunch of common shares in terms of how someone's approach is. Salaried employees don't think like the owner of a business. So that's not necessarily specific to Egypt, but that was a piece I definitely picked up in my perspective, as an investor. So,
All right. So then to kind of transition back into microcaps and whatnot, how would you say then you got your start investing in microcap stocks?
Yeah. So, again, this is one of these things where it's hard to put a precise, finger on exactly what first pulled me into a microcap. But, there's a book, it's called You Can Be a Stock Market Genius by Joel Greenblatt, which I'm sure everyone's familiar with. A great book, even better title on that one. And it's, I remember when I read that, probably a couple years after I started investing, it wasn't like the direct lessons of, spin-offs and things like that, so much as the indirect ones. It got me thinking more about what are my advantages and disadvantages? Who are my capital market competition? Who are my counterparties? And I was never going to be managing billions. Like if you gave me $1 billion, I'd probably put 900 million of it at Vanguard. So it's like real. Like that's just that's like realistically where I would end up. So it's like I needed to embrace being small, and over time I kind of came to believe that it's by far the biggest structural advantage you can have. Being able to wade into liquid corners of the global market, with 50,000 plus investable stocks out there, that's a huge advantage over having to choose from a couple thousand that are liquid enough. Watched by tons of analysts. You can widen your investment universe, and you get to pick up this liquidity premium. And so obviously the microcaps, they're the extreme of that. It's not like I won't consider non-microcaps. I'll invest in small caps, and hey, maybe I'll invest in a large cap one day. But the microcaps have become my wheelhouse based on that. So, and I can expand on this too. I have other thoughts about. And this probably goes back to my experience being on the inside of a relatively big company. Being big's tough, for the company, not just us as the outside investor, but for the company itself. Like some of the companies, out there just don't seem to be at a size level and a level of complexity that a real life human can manage, and like I look at JP Morgan, it's, Jamie Dimon might be like a talented manager, but, can you imagine being handed $2.5 trillion in assets at 11 times leverage and not steering it into a ditch eventually? I'm not sure that's something a human can do, and another problem I have kind of with the large, and I'm probably attacking more large caps here than supporting microcaps, but it's the same thing.
Go for it. Hey, this is the MicroCap podcast. So
I know, right? I feel like I'm in the right place to do this, right? So, I'm in a safe spot here, right? So, the other thing, the large and, mega caps, like by definition, they've put their best growth behind them. That's why they're large and, and mega caps. And so they have a shrinking menu of reinvestment options. They have more competition coming at them. And the management that got them there is often gone or soon to be gone, which means you have a good shot that eventually an unimaginative bureaucracy is going to take over that business and eat it alive from within. It's ironically, I think, Warren Buffett's my hero. I honestly mean that, but I think a perfect example of this problem is Berkshire, which I'm not long, and I don't think I'll ever be long that. It's run by the greatest capital allocator of all time, and it's underperformed the S&P by like 1.5% the last decade annualized. And hindsight says they should have been shrinking their size, returning capital. But people who invest in that, it's like, what's the probability there's going to be new management succeeding Buffett that preserves the culture and beats an index fund over the long term rather than kind of giving it the GE treatment? So these are all things that kind of steered me away from the large cap end and pushed me down to microcap.
Mm-hmm.
So
cool.
Yeah, and one more thing. And by the way, in truth, I just like microcaps more. I think they're more interesting. I like going off the beaten path, as you know.
Mm-hmm.
I like quirky, weird situations. I think they're more fun to research. I can actually value them. Like, I have no idea what Amazon is worth, and I don't understand how anyone else would have an idea what Amazon's worth. And you can call their management, get them on the phone. So, if you're small enough to be lucky to dabble in the microcap space, I think it's something you should embrace. So, is that enough pumping in the microcap space for your podcast?
I think that's good enough for now.
All right, good. All right, just trying to help the podcast here. So.
Oh, dude, thank you. So transitioning then into your philosophy, what is your investing philosophy when you're looking at microcaps?
Yeah, so this is probably another long answer out of me here. You guys are gonna experience what it's like to be my wife here the next probably 10 minutes, but I don't pity anyone who's still listening. So I mean, investing philosophy, I kind of chop it up into a couple of different things, because it's, you have kind of like the general background principles that kind of form the structure of how you invest. And then I have the kind of specifics of like, okay, well, how do I pick a company, and then I guess the other thing would be kind of portfolio management. So, I mean, I'll start with the kind of general principles, which I basically boiled it down to 3 that I just constantly say to myself in my head. And we'll see if they change over time. But it's basically stay small, stay long term, stay cool. And we covered stay small. It's just harder to manage more money. It's easier if you can stick to a reasonable asset size, which is convenient because I'm a crappy fundraiser. So, I mean, it's actually, it's a great policy for me personally, probably. I mean, I always find it interesting. People can't figure out why, a hedge fund all-star lost his magic. It's like he's 20 years older with a G5 boat and like an incredibly shrunken investment universe. It's like, yeah, what happened, so, but so we kind of covered the stay small piece. The long-term thing is, to me, means kind of squashing out short-term thinking wherever it pops up. A lot of it comes down to just getting rid of bad habits. Like, don't check stock prices, unless you have a reason to. Like, don't waste time thinking about performance. It's the most important thing, but it's also a complete and utter byproduct of the other things your attention should be on. Mm-hmm. Don't worry about what other people are doing. It isn't a tragedy because some other guy became a Bitcoin millionaire. It's that's fine. I don't know. There's actually Charlie Munger has like one of my favorite quotes ever on that last point. I don't know if you ever heard it. He says it's something along the lines of it's envy is a really stupid sin because it's the only one you can never possibly have any fun at.
It's a great quote.
I just love that. That guy's a quote machine. The stay cool is kind of my third background principle. I mainly picked that name because I couldn't think of anything else, and it's a really good Roots song. Feel free to YouTube that song, anyone out there. But I mean, the way I look at it, it's kind of the mindset issue. You're trying to keep a balanced middle way mindset. Trying to avoid extremes, get yourself all worked up. You can't take things too seriously because it's to me, that's all part of just allowing yourself the mental space to like adapt and evolve. And that's like vital, because I mean, you need to be okay with being wrong and changing your mind. Being wrong and changing your mind shouldn't be like an existential crisis. And I'll throw in a little quote your way. Actually, so Thomas Huxley said this about, like, he said about the great tragedy of science. He said it was the slaying of a beautiful hypothesis by an ugly fact. You know.
Yep.
And I just love that, because it's just, it's one thing to say like, oh, I changed my mind when the facts change and blah blah blah, but to me, like, that's kind of a lifestyle choice. That's a lot of that is just focusing on observing yourself from the outside and kind of managing your emotions and being okay with being wrong. And being wrong is kind of hard in the business, because it's, the whole narrative people use to raise money is you're basically saying I'm a genius, and but you can't really believe that and have long-term success, I think, so you got to find that balance.
Hey, one thing I remember that always got me through, especially when I played baseball, is like, hey, look, Bernie Williams was my favorite player growing up. They were always like, look, Bernie Williams makes millions of dollars and he gets a hit. He gets 3 hits every 10 at bats, or even 2, and still makes millions. So, failure is part of it.
I used to work at a bar in college. There was a guy there. It was like the skeezy owner's like skeezy son. And
did you say the same thing? I hope not.
Oh God, he would go up and just throw an insane game at every single woman who walked in there, and he would, like, strike out usually, but he'd turn around and then he'd go, hey, like, I'm batting 300. He's like, I'm an all-star in baseball.
Oh God.
It's much. It's like the rated R version of that story, I guess. Yes. But yeah. So I mean, that's kind of my like principles. I don't know. You want me to dive into kind of how I look at like specific investments, or?
What I want to know now is, those are kind of your principles when you're, that's good to have as your foundation, and so now, what's then your process for sourcing ideas and then assessing a potential new microcap investment?
Yeah. So like I'll double back and kind of talk to the sourcing the ideas, sure, and then I'll talk about how I assess them. So, on the sourcing front, I mean, I'd say like 50% are word of mouth. Other investors I respect, collaborate with, or occasional persuasive write-up I stumble on online. One thing that kind of took me a while to appreciate in those cases, of course, is I specifically try to avoid reading someone's 15-page thesis before I do my own work now. I think it's really important to go through a normal process, baseline, not someone else's kind of fleshed out thesis. Mm-hmm. Get their 60-second elevator pitch. It's someone you respect, you trust, like you think they do good work. But back off at that point, do your own work, and then come back and look at their work and discuss it with them. So that's kind of probably half the ideas. The other half is just coming from all directions. You might be looking at one idea that leads to another. Maybe you look up a competitor and you're like, oh, these guys are way better. You might see someone you think is interesting pop up on a board of directors somewhere. Mm-hmm. I use some screening tools and keyword searches and stuff, mainly, things like for example, like I think non-US spinoffs might be a little bit underfollowed at times. ViaMed was a good example from earlier this year.
And are you currently a shareholder?
Oh, sorry. Yeah, no. So I sold, and I'm pretty sure it's dropped a lot. So I might need to look at it again. But no, I was long at the beginning of the year, and I sold probably a month or two ago. When in terms of screening tools and keyword searches, I try not to use those in a way I think an algorithm could easily, replicate. I want to keep AI from stealing my job for as long as possible. So it's kind of, I like stuff where it's like, I found this through a route that, a quant couldn't have found this through. So that is something to kind of think about. But I mean, honestly, like in the end of the day, sourcing ideas, it's sources come from everywhere. Ideas can come from everywhere. It's mainly just, you just need to start with some intellectual curiosity and just kind of go hunting. Once I actually, you want me to kind of talk about what I do once I have an idea?
Yes.
In hand?
Yes.
Yeah. All right. I'll answer questions for you. I can feel where it's coming. So like the first thing I do is this. Like I have a very sensitive filter. We got like 50, 100,000, potential investments in the world. Like you need a really sensitive filter because you don't have a lot of time in a day. So I kind of go through. I'll dismiss ideas in a matter of minutes sometimes. And the filter, I'd say there's kind of three questions I'll ask myself before I put something onto my research list. It's, can I comprehend a business, without a PhD, which, basically means I'm never in biotech. Is there room to be wrong? That's largely a function of the leverage and complexity inherent in a business, both of which, if you think about it, just eat up margin of safety and make valuing the equity, frankly, really, really difficult. And the third thing, and it's probably the biggest one, is, I'm looking at, is management incentivized to grow per share equity value? I'm looking at things like comp to equity ownership ratio and historical share issuance and, stuff like that. So if it clears those, it's on my research list. And at that point, it's, my research list is often longer than I have time for. So it's a matter of shifting stuff up and down it based on, a number of factors. But I'd say a couple factors that push things up or down would be, one, if another investor I respect is long it. In a sense, that means they've pre-vetted it. So I know there's a better chance I'm not barking up the wrong tree. And I'd say another thing is if I can identify a specific reason there might be like a non-fundamental mispricing. And that kind of goes back to, spin-offs. They just cut the dividend. Cyclicality issues. Maybe it's an international market that happens to be really depressed right now, et cetera. Those will push things up faster. Once it's at the top of my research list, it's kind of it's deep dive time. Every investment, there's no standard. To me, I've tried to do checklist and mental lattice works and all these. I've tried to do all these different things, but I mean, the bottom line is every single business and investment kind of calls for its own angle to hit it from. In the end of the day, what I'm really looking for is kind of three things. I'm looking for, a strong capital allocator, who, as I've mentioned, is already, owns a bunch of shares, hopefully. I'm looking to see that they have a reasonable growth runway. That doesn't mean it's explosive. It just means they have things that they can do with their earnings and reinvest it into. I'm looking for a balance sheet that's not kind of under duress. And really, in the end of the day, those three items those are the things that will push my fair value up and down. And obviously, if they're pushing it down too far, I'm unlikely to have a position ever. If they're pushing it up, I'm more likely to. So, and they interplay. So if there's a reasonable growth runway, I don't want their flexibility constrained by a stressed balance sheet, whether that be from leverage or operating losses. And all else equal, if you find a stressed balance sheet, your probability wise, I think you're less likely to find a good capital allocator. And if you have a good capital allocator, I want them paired with a decent growth runway. I mean, that's their menu of reinvestment options. So and it's especially important, that last one, in the context of value investing, because, value traps, your best defense against a value trap is, quality management and growth, because, at the end of the day, they can continue to grow earnings. Even, the market may never agree that, this should be worth 15 times, not 10 times earnings, but at least they can grow the earnings, even if it doesn't re-rate. So, those are kind of the those are the things I'm really looking for. If you want, I can I will say this. There's a pet peeve too. Like everyone says like, oh, I'm looking for these things. And they just say all the things in the world that are good. Mm-hmm. And it's like, yeah, it's like kind of.
But you're dealing with microcaps. There's going to be hair.
There's going to be hair. And so so you got to pick, pick the things you care about, but you also got to pick some things you don't really care about as much.
Mm-hmm. What are those for you?
So for me, it's like, so I told you the things I really care about. The things I don't really care about are, dividends. I think a lot of people kind of, especially with a low rate environment, got obsessed with dividends. But look, if someone knows of a stable, no growth, 20% yielder, let me know. Like I'm interested. But it's like, but generally, if I own something, I think it's cheap, and if I think it's cheap, there's almost certainly better options for them to reinvest their earnings into. For example, right off the bat, there could be buybacks. But also maybe there are reinvestment options to grow the business. So, dividends are quite tax inefficient. So, I prefer to, that's not something I'm paying up for. If it happens to be there, fine. I guess the second thing, moats. I kind of don't care about moats, to be honest. I feel like everyone has gotten really obsessed with them.
Well, let me ask you on that point, because from my understanding, and I'm probably wrong, but when I hear that there's a good growth runway versus I don't care about moats, I don't know. That seems almost counterintuitive. Can you clarify that?
Yeah. So here I can give you an example, two different businesses, right?
Okay.
I'm probably about to mention a holding here too, so I'll disclose it if I do. So there's, you could take two different businesses. You could take take one that's, let's call it company A and company B, right? So company A is commodity-ish, low margin, but has super good management or super efficient, and they tend to have decent return on invested capital because they turn their assets and they manage their balance sheet well. And I'll bring up a specific name. You can look at I think I tweeted out a thread on this a couple of days ago. If people want to kind of go see the thesis on it. It's a British company, Cambria Automobiles. I am long. But that's a perfect example. I mean, they do 1% to 2%, before tax margins. There's no moat, being a dealership per se. I mean, you have a little bit of a local moat because you have franchise rights over an area, but not really. I mean, there's no one can make an argument that there's a great moat there, but they have great management. They run it really efficiently. They turn their assets. They have really cheap debt structure because basically the auto manufacturers leave stuff with them on consignment, which doesn't carry any interest expense for the first X period of time. And it works, and they produce really high returns. They can produce 20% returns on equity, and then you could take company B, that one's, has a bit of a moat, and they have a bit of a moat, and it's manifesting itself in high operating margins, and they're achieving a high return on invested capital, but competitors are going to go after that. Those operating margins stick out like a sore thumb. So it's it's the Bezos line, your margin is my opportunity. So to me, and in the end of the day, I'm going to have to say, okay, well, people are going to come after them the next 5-10 years. Can they protect their moat? You can get in reinvestment moat concepts and do all that stuff. But the truth is, if we're honest, it's really hard to predict what's going to happen with these competitive dynamics over 5-10 year periods. Mm-hmm. And I think it's getting harder to do that. I mean, the pace of change is constantly getting faster, Mm-hmm. So, in 1990, you could have some company and you're saying, okay, well, they have a strong moat. And, I think, between now and 2000 they're going to do great. Well, you had no idea what the internet was going to do. You had no idea how it was going to impact it. In 2006, you could have done it, and you had no idea what the iPhone was going to do. I mean, taxi cab medallions. Who on earth was sitting there in 2006 going, one of the big risks to these taxi cab medallions is the iPhone. No one. Right? So it's but with like a good management team that's just running the heck out of their business and has a bunch of skin in the game, like I'm like, yeah, he'll probably be a good manager in 5 years. And if I'm buying him cheap, and Cambria, again, I'm very low on that. They're just 7 times earnings. They're like 25% of like on like an EV to sales basis, or like 25% of valuation you see for the equivalent business model in the U.S. So I just think to me that's more interesting.
Right. So I mean, for you, it's really all about operational efficiency as well as quality of management. So for you, you said this actually earlier when you were talking about your experience in Egypt and working on the inside of a publicly traded company, that management quality and incentives is very important to you. What are the certain types of qualities that you do then look for in management, and what also are incentives that for you'd like to see?
Well, so on the incentives, the more it's just like, and again, I'll bring up the Cambria example again, just because it's one right in hand. I mean, he owns, the guy who runs it owns 40% of the shares, and he hasn't sold a single share since they IPO'd it in 2010. He doesn't sell the shares; he owns shares. If you look at his compensation, I don't have numbers in front of me. I think it's probably his market value of his stock, which I think is undervalued. It's probably about 30 times his annual compensation. So for me, I'm like looking at that thinking, like if you look at his return on his equity, he's getting like a 3% compensation dividend, shall we say, and he's getting, but like at the end of the day, if he wants to make money, he's going to have to move the equity. So that's the ideal incentive is old-fashioned common share ownership. It's not feasible in a lot of cases. Certain cases, the guys are new, and but in those cases, I like to see where they'll say Nicholas Financials, another company I'm long. They brought in a new CEO in 2017 and said you need to own 5 times your compensation and shares by 2023. So they're giving them time to get there, but that's the incentive. That's what I care about most. I'm not as fan as like the options, and it's really I haven't seen a lot of great incentive compensation schemes that just replace old-fashioned share ownership. In terms of qualities, it's I hate using cliche words, but I mean, it's kind of, you're looking for outsiders. On one hand, people that maybe are thinking a little different. But on the other hand, you also just might be looking for people who are running it like a small business. Don't really seem that aware of the fact that they're publicly traded, and they're just the business is their life. That's everything they do, and they're just focused on it and they're running it. That can work too. Those aren't necessarily outsiders. I guess obviously one of the things I'm going to look at, if some guy's been in a company for 10 years, I'm going to go look at return on equity, return on invested capital. I'm going to be looking at those measures for sure. But a lot of things you don't have enough of a record. So you have to go to these subjective measures. I like to see how people communicate. I mean, when you have someone who writes a good annual letter, it's nice, but you don't always find that. Sometimes there are good managers who just don't do that, so, so.
Cool. So then, my next question for you, and this is one of my favorite questions to ask, and you went through your experience a bit, and you've already kind of talked to how that has molded your investing strategy. But, can you recall an investing experience that helped mold your microcap investing strategy?
Yeah, the short answer is no.
I was going to say, usually when I ask that, it's a loss. So maybe that might spark.
The short answer is like no. It's funny. It's like, I mean, like the process to me, it's waking up every day trying to get like a little wiser and hope that compounds over time. You're just constantly learning. You're picking up little things every single day, and you're kind of adjusting your views. And I can't remember any real eureka moments. as you're developing as an investor, you start out, you have no idea what you're doing, and it takes you. I think it took me 2-3 years till I kind of knew what I was doing. And then of course you can get overconfident. You start making mistakes, and then you have to adjust and adjust and adjust. So it takes half a decade plus to get to a level where you start to find your own as an investor, I think. I guess I can answer the question too like this. You talk about I'm probably going back to what we discussed earlier, but working on the inside of a big kind of bureaucracy, it's publicly traded. My focus on management and incentives comes directly from that. And that's so important in a microcap, especially that management's important because it's the company. I mean, the CEO of a microcap is the company in many cases. There's no bench behind them. So really trying to get a feel for them is something I've drawn from my personal work experience. And I do not underrate how important it is for that person at the top to kick down a good culture. It's absolutely a real thing. It's subjective, but I've been on the other side, and that's something that really drives my process. Is focusing on the management. Mm-hmm. So.
Mm-hmm. So then, what would you say is your advice that you would have for new microcap investors looking to get into our space?
Yeah. So, I mean, if you're completely new to investing, in general, and, I think this applies to all levels of investing, but if you're small for reasons we've discussed, I think microcap's a great place to focus. If you're completely new, I mean, I think there's two things right off the bat, when people say, oh, I'm interested in investing, that I kind of push them towards. You need to be able to speak the language, which means you need to be able to read a financial statement, understand basic accounting principles like debits and credits. Mm-hmm. The second thing I'll throw at kind of people who are interested in starting to invest is, read 5 to 10 of the classics, Graham, Klarman, Lynch, Greenblatt, Buffett annual letters, just plug through 5 to 10 of those things. Don't get obsessed with them. Don't become one of those guys who just does nothing but read books on investing. I think that's counterproductive. You can absolutely overconsume investing books. But do that because it's either gonna grab you immediately and you're just gonna get bitten by the bug, or it's not. And if it doesn't bite you and you don't immediately kind of feel that passion when you've been reading through a couple of these books, open a Vanguard account, dollar cost average in there, and go find another passion. Because it makes no sense to invest if you don't have passion for it, because you might spend 20 years and underperform the market. So you should at least enjoy it. So, but then once you clear those first two things, it's practice. You're gonna have to put in 10,000 hours. I think that's a good number. You're gonna have to kind of, you're gonna start small. Don't put in more money you're willing to lose, and just slowly scale up. You're going to want to follow the blogs and investment sites out there. You're going to be seeking alpha comment sections, and one thing I say new investors too is don't be shy about just engaging other investors and looking stupid. You just got to get over that. It doesn't matter, because you're going to learn so much from collaborating and talking with other investors. Other than that, it's just pick a microcap, grab their annual report, and start analyzing it and feel your way through. I wish there was a specific path you could lay out for people. But everyone kind of takes their own voyage. Everyone kind of finds their own way there. Mm-hmm. And the reason I stress the passion thing and the reading is because I think that if you have a passion for it, you're gonna you're going to find your way there. And I think if you don't, I think you're screwed. So,
you hit on something really cool there. And it's the whole reason why I had the podcast is, there's so many different paths all to the same objective, to make money, and it's,
right.
It's interesting.
Right. And look, I mean, I got investing because I had a pot of money and I thought I had accounting knowledge and all that. And I said, I'll use this to make money. It doesn't become about the money. Once you really get into it, it's like, look, money's awesome. It's great. Right. I absolutely money's fantastic. You know what I mean? But it's like, it just becomes it's a byproduct of a passion and kind of just being in the game. You just kind of start to love the game, and then the money becomes the byproduct. I don't think the money alone will drive people, so without a doubt. So
well, you think about it like a sport or a professional athlete, and I think they would all probably agree with that sentiment. At the end of the day, it's for love of the game.
Some of the best athletes I've ever seen are investors. Oh wait, no, it's the complete opposite. We're like, yes, it's our arena, for us, nerdy, that's a lot of people. It's great.
All right. So Thomas, where can my audience go and find more information about you and PFH Capital?
Yeah, so PFH Capital, the website's PFH, as in. I'll tell you, it stands for Pennies from Heaven. If anyone wants to,
that's great.
There's no YouTube for kids out there. Go look up Frank Sinatra, Count Basie, Pennies from Heaven. It's a great song, and I think the lyrics are just super applicable to value investing, which is how I landed on it. So PFH, as in Pennies from Heaven, CAP.com, and my Twitter handle, which I kind of plan to be periodically posting idea threads to and all that, is just at PFH Capital. PFH Capital. So, yeah, cool. Pretty straightforward. And I love chatting with our investors, so, feel free to reach out.
Cool. Thomas, man, thank you so much for joining me today. That was a lot of fun, and have a happy holiday, and I'm sure we'll talk soon.
Thanks, Bobby. Happy holiday. Merry Christmas, everybody.
All right. Talk to you soon. Bye.
All right. Bye.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Thomas, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@snnwire.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official MicroCap news source, and the MicroCap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone, and Happy New Year.